analysts have highlighted, the further impact on consumers as yet another interest rate hike is expected. That decision will come in the outcomes of the first Monetary Policy Committee meeting of this year to be announced by the Reserve Bank Governor Lesetja Kganyago later today. Analysts are expecting continued monetary policy tightening based on inflation remaining above the central bank's target range of between 3 to 6%. Now, the latest data from Stats SA reveals that consumer price inflation eased to 7.2% in December of 2022. That's down from the 7.4% recorded the month before. On the side of expanding on that forecast around the expected interest rate decision and the anticipated effects on consumers as well as homeowners, we speak to CEO at Ooba Home Loans, Rhys Dyer. Thank you so much for your time, Rhys. As expected, the mortgage holders have borne the brunt of these interest rate increases. Talk to us about a holistic view of what another repo rate hike would mean as the lending rate also goes up.
Yeah, thank you. Absolutely, as you say, consumers have taken the brunt of the what potentially could be 400 basis points interest rate increases come the end of the day. I think whilst we're hoping and wishing for no more than a 25 basis point increase, I think 50 is probably more likely. And just to put that in perspective, from November 21, when the interest rates started increasing on a R1 million loan, it's an extra around about 2,500 Rand monthly repayments for a homeowner. So, very significant in terms of affordability increases.
Analysts have also come out to say that there is a projection of at least 25 basis points of a cut, which would not be as aggressive as 50 or 75 basis points. Talk to us about how much less of a pain that would be, especially as you've painted that outlook on the difference between how much interest rates have gone by if one is servicing a loan of over R1 million.
Sure. Certainly from our side is that, if we do get 25 basis points, it may not be the end. And potentially it may be better to take the 50 and have no more. But I do think we're close to the end of the cycle. Whether it's another 25 hereafter or no more, I think we're reaching the end. So certainly from a consumer perspective, their ability to plan, given the end of that tightening cycle, I think is obviously helps significantly.
An area that's been of interest, given the interest rate hike increases from record lows, is the first-time home buyer. How is that particular individual or group, managing the latest developments as well as what they are anticipating in the near-term outlook?
Yeah, so during COVID, when interest rates were, at record low 7%, we saw first-time home buyers really pour into the market. It was cheaper for many of them to buy than to rent. So if we look at our stats, around about 62% of our applicants were first-time home buyers. That's come off quite considerably now down to about 49%. And that would be expected that the first-time home buyers are the hardest hit by interest rate increases. And we are definitely seeing first-time home buyers buying cheaper properties. So where they were buying, where they were buying what they could afford at a 7% interest rate, they're now buying what they could afford at a 10.5% interest rate. So definitely property prices that are being purchased by them are smaller, and they're buying in areas where there's more affordability.
Is this trend expected to continue, particularly because we have moved towards interest rate levels that are said to be at a normal rate, what we were used to before, as opposed to a buyer's market or a seller's market solely because one can gain some sort of benefit?
I think we'll settle at the current levels. I think we've been very fortunate in that bank lending has been very, very competitive. So the availability of 100% loans, quite strong pricing below prime, is still very much available in the market. So I don't see that changing significantly over the 2023 year. So I think where we are with first-time home buyers, and assuming that we have reached the end of the interest rate tightening cycle, I think we will kind of settle at these levels.
Thank you for your input. That's Rhys Dyer, CEO at Ooba Home Loans, expanding on our outlook as we approach that decision by the Reserve Bank the MPC, Monetary Policy Committee. It is their first meeting of this year, and the Reserve Bank Governor, Lesetja Kganyago, will make those outcomes known by 3 p.m.